Welcome everybody to our another Wednesday migration seminar. We are grateful to have Ana Maria Mayda with us, who's going to be presenting their paper. This is joint work with Chris Parsons and Pierre-Louis Vezina. The title of the paper is long, but I'm going to read it anyway. Refugees and Foreign Investment, Quasi-Experimental Evidence from the US Refugee Resettlement Program. I don't know if the fourth co-author, Pham, is joining us or not. If I'm missing, I apologize. We're going to follow the standard schedule. Ana Maria will go first. Chris and Pierre-Louis are going to be handling the difficult questions, which are going to be, you can type your questions and they will respond in real time. And we have quite a few people attending and we are exactly 11:30. The floor is yours, Ana Maria, please.
Thank you. Thank you very much for the invitation to present, to the organizers, Michelle, Ben, Simone, Frederick, Jesus, Çağlar, and Hillel. The paper I'm presenting, as Çağlar said, is joint work with Chris Parsons, Pham, and Pierre-Louis Vezina. So let me immediately get to the point with a couple of examples of anecdotal evidence. So in this paper, we want to analyze the impact of refugees resettled to the United States on foreign direct investment back to refugees' countries of origin. And consider the case, for example, of David Tai. He was refugees from Vietnam right after the Vietnam War, who arrived to the United States in 1975. And he actually moved to Seattle when he was very young, and he saw the flourishing of Starbucks. And he was inspired later on in 1998 to establish Highlands Coffee, which is a coffee chain in Vietnam. And it was the first investment by Vietnamese refugees back to Vietnam. Consider that in 2009, they had opened 80 coffee shops in 6 cities across Vietnam. And by 2012, David Tai was able to sell 50% of shares for $25 million. So this is the first example of somebody who left in very critical conditions his country of origin. And then after several years, he was able to contribute back to his country of origin, Vietnam, through foreign direct investment. Next, consider the case of Tan Phuc. Tan Phuc, again, left at the end of the Vietnam War, and he was the former CEO of Intel Vietnam. And he was also the behind the first tech company, FDI to Vietnam, because he was the facilitator of an investment of $1 billion in a chip facility in Saigon that created 4,000 jobs. So this was a huge investment, and probably he was also driven by the Vietnamese government, which has been quite active in trying to harness the Vietnamese diaspora to invest back in the country of origin. So these are a couple of examples that tell us that refugees can and do contribute through foreign direct investment to the development of their country of origin. And we chose 2 cases that have to do with Vietnam because Vietnam is the country that we study as a case study in the second part of the paper. In the first part of the paper, we do broader analysis, but then we zoom in and we focus on Vietnam. And for Vietnam, we also have more anecdotal evidence. Consider that between 2002 and 2015, foreign direct investment constituted 7.7% of Vietnam GDP, and there is abundant evidence that the Vietnamese diaspora made a lot of investments in several sectors ranging, as you can read, from coffee shops, restaurant chains, property, fashion, record labels, and the manufacturing sector. And so, for example, Dan Tri, which is a news agency in Vietnam, states that the Vietnamese diaspora invested around $1 billion in more than 900 businesses in Saigon in 2016. So ample anecdotal evidence about this link we are interested in, which is the link from refugees, which is a very specific group of migrants, and foreign direct investment back to the countries of origin of refugees. Now, what is then the motivation of our paper? The motivation of our paper is to go from the anecdotal evidence to systematic evidence, which is not there in the literature for the specific case of refugees. Refugees, as I was saying, are a particular subgroup of migrants because they left their country of origin in situations which are very critical. Their countries of origin may be a war, or they may be having some natural disaster, or there may be political persecutions of specific groups within their country of origin. So the situation that refugees leave behind is very different from the situation that economic migrants leave behind. And so ex ante, I don't think we can say whether refugees will end up having an impact on investment back to their countries of origin. So that's what we want to analyze from an empirical point of view. And we think that this is very important because clearly foreign direct investment can contribute to growth and development in the country of origin of refugees. There is no evidence about that in the literature. Next, to the extent we find that there is this link, we also show that there are benefits to be made by the country that welcomes refugees. And these benefits are the returns to the foreign direct investment. So basically, if we establish this link from refugees back to foreign direct investment to their countries of origin, we are able to switch the focus from the cost of refugees, which has been the usual focus in recent times, to the benefits of refugees. And these are benefits, as I said, both for the origin country of refugees and for the host country. So that's why we think this is especially important from a development point of view for the origin countries and for the benefits in the host. Okay, I'm not going to, no, actually I do have time. I went quite fast. So there is quite large literature that shows that foreign direct investment has a lot of good effects on the country that receives them. In terms of development, in terms of stable relationships with the other country in the pair. There is work by Beata, Javorvich, and Gord and Strobel, which finds that foreign direct investment produces technological transfers, skills transfers, gives rise to higher wages, backward and forward linkages. So a bunch of very good effects that countries of origin would hope for. And also there is evidence that technology diffusion through FDI contributes more than domestic investment to productivity and economic growth. And it is much less, foreign direct investment is much less vulnerable to capital reversals when there are bad shocks. So they're much more stable, more robust. Okay, so what do? Let me get to the core of the paper. In this paper, we want to estimate the causal impact of refugees resettled in the United States on foreign direct investment flows to the countries of origin of refugees. And we do so in two parts. In the first part of the paper, we look at refugees who have been resettled in the United States from all over the world. So in particular, we analyze the impact of refugees resettled from any country in the world between 1990 and 2000 on foreign direct investment flows back to these countries of origin 15 years later, so between 2005 and 2015. Why do we look at 15 years later? Because we think that there needs to be time for this investment to take place after the first arrival of refugees. maybe because the country of origin still is a war right after the departure of refugees, or maybe because it takes time for the pair of countries to establish a business relationship. So that's why we look at these long lags. But we also do some robustness checks to look at different lags. And what we do is to exploit variation across US commuting zones and countries of origin of refugees in this first part of the analysis. So the geographical level of detail is quite good because we can do the analysis at the commuting zone level. And to do so, we use highly confidential data from the US State Department, and this is data on the universe of refugees. Then, as I was telling you at the beginning, we zoom in on a case study. And the case study is Vietnam. And why do we do so? Because by zooming into this study, first we can look at a different period of time. We can look at the impact of refugees resettled from Vietnam to the United States right after the Vietnam War, so between 1975 until 1994, so a very different period of time compared to the first part of the analysis. And also this episode in history is special for a number of reasons that have been documented very well by my co-authors in another paper on the impact of the Vietnamese boat people on trade flows. Basically, they make a very strong case that the dispersal of the initial wave of Vietnamese refugees was really random for a number of reasons. And that's what we exploit for this case study. The other very nice thing about this case study is that during a very long period of time, when we look at the arrival of Vietnamese refugees, there was a ban on FDI and trade imposed by the United States on Vietnam, which means that reverse causality by construction cannot take place. So that's a very important strength of this second part of the analysis. Now, when we do this type of analysis, we need to face the obvious challenge in the analysis of impacts at the local level of immigration. And it is the fact that immigrants, refugees tend to choose where to live in an endogenous way. And so how do we address the empirical challenge? In the first part of the paper, we exploit some features of the resettlement program in the United States. In particular, there is a substantial group of refugees to the US who are called refugees without US ties, who don't decide themselves where they go within the United States. So we exploit exogenous variation, which we think is exogenous in their initial placement within the United States. So basically, we can exploit variation in their placement across US commuting zones and country of origin. And so we can estimate a structural gravity model where we include both commuting zone fixed effects and country of origin fixed effects. And as I will tell you more in detail later on, especially the commuting zone fixed effects are quite important because they absorb all those commuting zone location specific effects that you might worry resettlement agencies have in mind when they decide where to place refugees. But we can control for those commuting zone fixed effects, and we do so. Now, you might have other worries, and in particular, you might worry that the resettlement agencies are especially strategic. And so I will make small parentheses to address these additional worries that you might have through a different interpretation of the specification that we estimate. But I'm not going to give you the details right now. Next, for the Vietnam case study, we basically exploit the natural experiment. So the fact that the first wave of Vietnamese migrants were dispersed quite widely within the United States, and in a way which really looks to be quasi-random. For various reasons. Congress didn't want to repeat the mistake that the US had made with the Cubans in Miami. And Congress didn't want the Vietnamese to be a burden on specific commuting zones. And also, in 1975, the situation in relation to these refugees was totally chaotic. The dispersal took place in a very short period of time. It was, as I said, quite chaotic, and it prevented a strategic placement of this first wave of Vietnamese migrants. Okay, so basically you have the broad picture about what we do, about these two parts. Let me tell you what we find. We do find that refugees resettled in the United States have had an impact on foreign direct investment flows back to their country of origin. And I can tell you what the magnitude of the effects is, but importantly, you may look at this number and they may seem small. They're actually not small. They are of the same order of magnitude, but greater compared to the impacts that have been found in the literature for migrants, economic migrants on foreign direct investment. So I will go back to the magnitude of these effects later on. We also find that there is substantial heterogeneity across countries of origin. The countries of origin for which we document the biggest effects are in the ex-Soviet Union, Serbia, and Vietnam. And finally, we confirm our results in the specific case of Vietnam. So now, to summarize, we think that the contribution of this paper is in isolating the impact of this very specific group of migrants, refugees, who are welcomed in the destination countries for mostly humanitarian reasons, not for economic reasons. Yet, as we show, they can make a huge impact from a development point of view on their countries of origin, through foreign direct investment flows. And we think that we are quite strong in terms of causal identification. So that will be the core of my presentation. I will try to convince you that, as I think, we have a very clean identification strategy in both parts of the paper. So let me say a couple of words about the literature related to this paper. So this paper broadly is related to all those papers that analyze the impact of migrants on economic relationships between countries. So in particular, trade and foreign direct investment. And indeed, the channels through which we think refugees affect foreign direct investment are the same as the channels through which migrants, refugees are likely to impact trade. So refugees probably reduce information frictions and so allow investments to take place back in their countries of origin. They also minimize the problems that come up with weak contract enforcement because of their networks in the countries of origin. So these are some of the channels that the literature has identified. And there are some papers that look at empirical evidence, both for trade and for foreign direct investment. But for foreign direct investment, the literature has analyzed always the impact of all migrants, not refugees specifically. So there's a nice paper by Çağlar, Beata, and co-authors. There is another paper by Thomas Chanet, Burkardi, and I now forget the third co-author. All these papers find that there is an impact of all migrants. But we know that a lot of migrants are economic migrants. So instead, as I said, we focus on a very specific subject. So now let me move on to data. One strength of the paper is that we are able to use very nice data. So let me give you some background about the way refugees are resettled in the United States after the 1980 Refugee Act. So there are two agencies in the United States that take care of refugees resettlement. One is the State Department, and the other one is the Department of Health and Human Services. The State Department is the agency that is responsible for processing refugees back in their country of origin and then welcoming them and also taking care of them for the first 3 months of arrival. And the US State Department works with resettlement agencies. So these are agencies that exist historically in the United States that work to create the best conditions for receiving refugees. So they find sponsors, they find locations for the refugees. And basically we have data from the US State Department on the universe of refugees that have been resettled through the 9 refugee resettlement agencies. And it is important that we have data on the universe because it means that basically there is no sampling error in our analysis. We definitely aggregate the data to the commuting zone level and to the country origin, to the commuting zone by country origin level. So our data contains a lot of information about refugees, but most importantly, it tells us the year of arrival. It tells us the city and state in the US of initial placement. And so we can match the city and state of placement with the commuting zone, which took quite a bit of work actually. And then we have information about countries of origin, and importantly, very importantly for identification, we have information about the type of refugee. There are 2 types of refugees. Refugees with ties, so refugees who have family and friends in the United States, and refugees without US ties. Refugees without US ties have no family and friends in the United States. And it is variation in the latter that we use for identification. Okay, so now let me show you some figures. So this is a figure that shows you the number of refugees without ties from 1990 to 2015, broken down by region of origin. We look at refugee arrivals in the first part of this period, between 1990 and 2000. So refugees without ties in this period of time were, for the most part, from, you see, Asia, the pink area, and from ex-Soviet Union countries, the brownish region. Next, let me show you the numbers of refugees with ties over the same period of time. There are more refugees with ties than without ties. And they come from all over, but again, in our period of analysis, they mostly come from Asia and the ex-Soviet Union. Okay, now, in our period of analysis, what are the top countries of origin of refugees resettled to the US? Well, there are Vietnam. That's also another reason why we look at Vietnam as our case study. A few countries from the Soviet Union, Russia, Ukraine, also Iraq, and then Myanmar, Bosnia and Herzegovina, and you can see the rest of the list. Now, what about data on foreign direct investment? Also, data on foreign direct investment is quite nice because it is data at the project level. It is data from FDI markets. FDI markets is the research arm of the Financial Times. Basically, what they do is to collect data on all cross-border investments at the project level, and they actually record the data both at the intensive and at the extensive margin. So they tell you the value of the FDI project, of the FDI flow, and the number of FDI projects that takes place. And they also tell you an estimate of the jobs that are linked to the foreign direct investment flow. So very nice data. It is data all linked to greenfield projects. So projects that create either a new physical project or an expansion of an existing investment. So with new jobs, with new capital investment. There is no minimum size for the investment to be recorded, and mergers and acquisitions are excluded. So a lot of nice aspects of this data. This is the data that we use. And this is a figure of changes in foreign direct investment from the United States to countries all over the world in the period that we analyze, between 2005 and 2015. So as you can see, foreign direct investment from the United States to countries in the world increased up until the Great Recession, and then started to decrease. Okay, so what I'm going to show you next is preliminary evidence that there is indeed a link from refugees resettled in the United States and foreign direct investment from the specific US commuting zone in which they are placed to the country of origin they come from. So on the x-axis of this figure, you have the total number of refugees arrived between 1990 and 2000 in a given commuting zone. And on the y-axis, you have the share of FDI projects to all the countries of origin of refugees in that commuting zone. And you see that there is this positive correlation. Okay, now I'm gonna get, as I said, to the core of the paper, which is the identification strategy. And so basically, we can break down the empirical strategy, the way we tackle endogeneity, into parts. Basically, there are two main threats to identification. One is what we call individual sorting of refugees into commuting zones. The second one is strategic placement of refugees by resettlement agencies. So let me first talk about sorting of individual refugees into commuting zones. What are we talking about here? Here we're talking about the fact that if refugees are free to choose where to locate within the United States, of course, they're going to go to places that are doing better from an economic point of view. They're likely to go where labor markets are strong, maybe where FDI flows are big because maybe there are more job opportunities. So basically, they're likely to sort themselves. Now, this threat identification is not an issue in our analysis because we exploit a variation in the initial placement of refugees without US ties. Refugees without US ties, as I hinted at, do not choose where they're gonna live upon arrival to the United States. The decision about where they're gonna live is completely out of their hands. It is resettlement agencies that decide where they're gonna be placed. So that's very important. And you might worry, well, after they're placed in a given location, maybe they're gonna move. You're right, that would be endogenous. That's why we use the initial placement of refugees without US ties. Now, you might be worried that then if lots of them leave, our first stage, although we don't have the exposed number of refugees after they have moved within the United States, but if we had it, you might be worried that it wouldn't be strong. But again, we have evidence that most of the refugees without US ties stay in the location of first placement, because if they didn't do so, they would lose access to all the services provided by resettlement agencies. So in another paper, I calculated with my co-authors that, for example, in the first 3 months of arrival, only 7.4% of refugees without ties moved out of the commuting zone of initial placement. So basically, refugees without US ties are put in a location by resettlement agencies and for the most part tend to stay there. So we think individual sorting is a non-issue in our case. But of course, resettlement agencies do make a decision. So basically, while refugees don't decide where they're going to locate when they arrive, resettlement agencies make the decision, and we might worry that these resettlement agencies are strategic. Now, let me tell you what resettlement agencies say about the process they follow to place refugees. They say that they locate refugees without ties across the country according to jobs, housing, medical and social services availability. So they definitely take into account economic variables. From what they say, seems like these economic variables are location specific, commuting zone specific. If they are, we are fine, because as I told you, in our empirical specification, we are able to control for commuting zone specific fixed effects, which capture all these location specific factors. But
Ana Maria,
yeah,
this is Danny Bahar. Regarding the identification, I mean, it's clear that the location of the refugees is exogenous to the refugee, but is it random? I mean, is there any worry, or should it worry us that that agencies are locating the refugees in areas that have a positive trend, a previous trend in terms of FDI, or in general to the world? Is that a worry that we should have?
Okay, so let me actually, you're right, there is still that worry independent from what resettlement agencies say. So let me now take the devil's part and say, what about if, for example, resettlement agencies are strategic and want to place refugees in locations in commuting zones which are especially good for refugees from that country of origin. So what I told you before is that to the extent the endogeneity that Danny, for example, was mentioning is commuting zone specific, we're taking care of it. But to the extent it is commuting zone by country of origin specific, we might worry. Now, note that it is unlikely that resettlement agencies sit down, do empirical analysis, and figure out whether a specific commuting zone is good for refugees coming from Bosnia, for example. But a more reasonable hypothesis is that what they simply do is to target commuting zones where there is a big community of connationals. And then you might worry because a big community of connationals might be correlated, for example, as Danny was mentioning, with factors that attract refugees, that push resettlement agencies to place refugees in that location, and also that increase FDI. So how do we address this issue? What works in our favor is that there is a lot of evidence that resettlement agencies cannot be too strategic because there are delays, uncertainties. So, for example, a resettlement agency may plan to receive 10 Somalis in 1999 and get 20 Iraqis in 2002. So these delays and uncertainty, as also Beeman 2012 in a very nice paper shows and states, these delays and uncertainties prevent resettlement agencies from being strategic. But we still worry, of course. So what do? First, we control for these communities of nationals. In 1990, in 2000, and we also control for the flow of economic migrants between 1990 and 2000. So you realize that by controlling for the flow of economic migrants over the same period of time, we are controlling for all those factors that would drive workers from the same country of origin to locate in the same community zone. So for all those factors that might create endogeneity. So this is a first way that we address this issue. So basically, we end up, this is a summary slide, estimating a structural gravity model with commuting zone fixed effects, country of origin fixed effects, and a bunch of robustness checks to check whether the existence of a community of connationals might create endogeneity. But to get to address more directly Danny's question, let me show you a figure that it's very telling to me. It is not in this paper, it is in another paper that we cite, another paper of mine, but it is a figure that shows you, not in the same period of time that we analyze, but in a period of time for which we have data on both economic migrants and refugees year by year, that after controlling for commuting zone and year fixed effects, there is no correlation between refugees without ties and all other immigrants across US commuting zones. So basically, this is one way to show you that all those factors that drive economic migrants to go to a given location are not at work in the placement decision of resettlement agencies. So this is one way to look at the placement of refugees. But now let me go back to what I was saying, and let me make another important point that we do discuss in the paper. And this important point is that the structural gravity specification that we estimate can be reinterpreted as the first difference of a panel specification of FDI stocks on refugee stocks. Being a first difference, look at, for example, at this equation. This is the stock specification I'm talking about. This is a specification which is fully saturated with pair fixed effects. So commuting zone by country of origin by time, and commuting zone by time fixed effects. Now, if you take the first difference of this specification between the 2 years that we analyze in our paper, then you get our structural gravity model specification. But basically what this is telling us is that by estimating our structural gravity model specification, we are getting rid of the commuting zone by country of origin fixed effects of a stock specification, which is the specification which has been used in the literature. It is the specification that has been used by Beata and Çağlar, by Burkhardt-Gerald. So if you are very worried about this commuting zone by country of origin effects, we think we are fine also from that point of view. So this goes a long way to answer your question. Now, I do have a few more slides about the same point, but I don't have time, and I knew I wasn't gonna have time to go over them, but they directly relate to Danny's question. They give you more detail. So now let me get to the baseline results. In the first 3 columns, we estimate OLS regressions. In the 4th column, we look at the impact of the total number of refugees instrumented with refugees without ties on FDI flows. We find a positive and significant impact. And this positive and significant impact tells us that doubling the number of refugees in a given commuting zone from a given country of origin leads to an increase in FDI flows by 5.4%. So this is what these numbers mean. Now let me show you some robustness checks. So for example, we do control for the community of connationals in 1990, in 2000. Something else that we do is to focus on commuting zones where there are no connationals from the same country of origin. So again, this is to make sure that our results are not driven by some other omitted variable that would drive both resettlement agencies' decisions and FDI flows. If there are no economic migrants in those commuting zones, it means that there are not great commuting zones for refugees from that country of origin. Yet, refugees from that country of origin are placed there, and for them, we do find a positive and significant impact. So we think that that's quite strong evidence. And then we also control for migrant inflows over the same period of time. So next, we show some heterogeneity with respect to the country of origin. And as I mentioned at the beginning, we show that the effects are stronger for countries from the Soviet Union, ex-Soviet Union, countries from ex-Yugoslavia, like Serbia and Vietnam. So let me say just a couple more words about the magnitude of the effects. They're comparable to what the literature finds. So they are of the same order of magnitude, but they are bigger than what the literature has found for the impact of migrants, of all migrants, on foreign direct investment. So this is very important also because you see, we do control very directly for all other migrants in our regressions. So you might be worried that what we are capturing is simply the fact that these other migrants from the same country of origin are in the same location and they are the ones doing the foreign direct investment. But what you see in the fourth column is that both economic migrants and refugees have a positive and significant impact. And they tend to go to different locations. Okay. Now, we do some experimenting, we look at different lag structures, we look at different periods of time, we find robust results, except in the period of the Great Recession. During the Great Recession, the results are not significant, which makes sense. Okay, now let me get in the last 8 minutes to the second part of the analysis, which is the Vietnam case study. So what do we do here? Here, we basically take advantage of this natural experiment. My two co-authors, Chris Parsons and Pierre-Louis Vezina, make a very strong case that the very first wave of Vietnamese who arrived in 1975 were relocated quite randomly within the United States. So here are some photos of their arrival in 1975. This is one of the camps where they were housed in the United States. But let me show you these quotes. The first one basically is from the US Congress. Basically tells us that the United States really wanted to spread Vietnamese refugees all over the US because they didn't want them to be a burden for specific areas. So basically, in part because of the short period of time, in part because there was an intent by Congress, these refugees were spread all over the United States, as you can see in this map. And they went to locations that were not at all their preferred locations. So there is some evidence that a lot of the Vietnamese refugees wanted to go to California. More than half wanted to go to California, yet around 1/5 only went to California. Many went to the north of the Great Plains, which was not an ideal place, for example, from a weather point of view for them. Okay, so let me get to the part of the analysis. Another important strength point of this part of the analysis and of the paper by my two co-authors on impact on trade flows is that between 1975 and 1994, there was a ban on FDI and trade from the United States to Vietnam. So this means that by construction, reverse causality cannot be an issue. There were no economic relationships between these two countries. This is very important. But anyways, even putting aside this point, we still think that the 1975 allocation of Vietnamese refugees across the country, based on the millions of robustness checks that Chris and Pierre-Louis did in their first paper, is random across the United States. Now, compared to their paper, we are able to exploit much more detail in the data because they look at the state level while we look at the commuting zone level. So now, for the sake of time, I'm going to show you the regression that we estimate. So here we have variation only across US commuting zones because there is only one country of origin of refugees, which is Vietnam. But we are able to differentiate between the north and the south of Vietnam. So most refugees came from the south of Vietnam. Not from the north. And exactly for the south, we find a positive impact of Vietnamese refugees on foreign direct investment back to Vietnam. So this is a picture of the impacts that we find for CapEx is capital expenditure, so FDI flows, jobs is number of jobs, and the project is number of projects. And so the darker lines are the effects for the south of Vietnam, and the lighter lines are the effects for the north of Vietnam. So basically, what we find is that for the south, which is the region of origin of Vietnamese refugees, there was this pro-FDI impact. And on top of that, we also find that Vietnam, the Vietnamese government, carried out policies to attract investment, people who had left Vietnam after the war. So they implemented 2 laws, a 2005 law to make the environment more friendly towards investors, and a 2008 law to allow Vietnamese refugees to gain back Vietnamese citizenship. And we find that the pro-FDI positive impact of Vietnamese refugees in the south of Vietnam became stronger after these laws. So this top graph is for the south. The bottom is for the north. For the north, we find no effects. So we find that the number of refugees after the laws were implemented has no significant impact on FDI flows, as we would expect. While for the south, we find a positive and significant impact. So let me conclude. Basically, we think both the institutional features of the more recent resettlement of refugees from 1990 on, and of the past resettlement of Vietnamese refugees back in the 70s, allow us to construct a clean identification strategy and to estimate the causal impact of refugees on FDI. And we think this is especially important for the specific literature on political refugees, because political refugees are allowed into host countries mostly for humanitarian reasons, and showing that they do have a very good positive economic impact is especially important. And also, the last part of the paper highlights the pro-development potential of policies, like in Vietnam, that are meant to encourage investment by diaspora back in the country of origin. I'm done.
Çağlar, let me just say something to Anna Maria.
Okay.
Pierre-Louis has handled so far 26 questions. So just
wow, poor Pierre-Louis. Thank you,
that's a
Pierre-Louis.
world record, at least for our seminar series. Çağlar, I'll let you take the lead now.
Yes, thank you, Anna Maria.
You're welcome.
Yes, we have 12 minutes, and now we are open for questions. Hilal, you have a question, comment?
Yes, I was interested in the point estimate. What is your preferred interpretation for the point estimate? And I remember from a previous presentation you did, if you compare it to the trade paper by Pierre-Louis and Chris, I remember it was lower, I think, and most of the literature shows higher coefficient for FDI than for trade. So in most of the non-experimental literature, you have something like 10% elasticity in most cross-country papers for elasticity of trade to migration, and for FDI, it's double, triple that. I think you have a lower coefficient, as I was wondering how you explain it.
Okay, so we looked quite carefully at these magnitudes, comparing them to other papers. So we compared them to the paper by Çağlar and Beata, and to the paper by Chanet co-authors. And basically what we find is that, as I was saying, let me go back to the table. Basically the table says, the main baseline table, in the fourth column, that a 10% increase in the number of refugees in the commuting zone from a given country of origin increases FDI by 0.54%. Now, this may seem very small, but a 10% increase is an increase by less than 1 refugee. So basically, if you consider these effects in terms of bodies, number of individuals, and you compare them to the migration literature.
Okay, so what you're saying is the marginal effect is really bigger.
Yes, it's much bigger because basically doubling the number of refugees means increasing in the average commuting zone country of origin pair the number of refugees by 8 individuals. So 8 additional refugees increase FDI by 5.4%. In the paper by Beata and Çağlar, 8 additional migrants increase FDI by around 2–3%. So they're comparable, or same order of magnitude, but ours are a little bit bigger. Now, I also just 10 minutes before the beginning of the presentation compared our results on the number of jobs created by FDI to the results found by the paper by Burcardi, Thomas, and co-authors. And for the impact on the number of jobs, we find exactly the same. So we find 7% increase in jobs created by FDI associated with doubling the number of refugees in a given location from a given country of origin. So that, I think, to me was reassuring that we're getting magnitudes which are in the same order of magnitude as well-established papers in the literature. Now, I cannot tell you as much about the comparison between trade and FDI, because, for example, in the paper by Chris and Pierre-Louis, they look at a very different level of aggregation. They look at the state level.
Yes, you mentioned this in the presentation, yes.
Yeah, and they look at one country of origin. So we could compare, I guess, the Vietnam results, but still it's a different exercise, and it's exports from an entire state in the United States.
Okay, thank you.
You're welcome.
So,
hi, I'm Michele from Moscow. I was wondering whether you could exploit heterogeneity in the likely reason for the refugee migration to say something about what exactly might make refugee migrants more likely to send FDI back to their countries, and therefore shed some light on the difference between a refugee migrant and an economic migrant. So I have seen, you know, you have data on Russians migrating on other countries. So there is variation across countries and over time in the likely reason for migration for these refugees. And maybe you can say something interesting there, even though the heterogeneity might not be causally identified yet.
Yeah, so, you know, when we look at the impact of both economic migrants in this table and refugees, the two effects are comparable. They're not, I doubt that they're significantly different. Yeah, so, but we haven't investigated this specific angle. I do agree with you that it would be very interesting. I think that what might become very important is the fact that countries of origin of refugees are countries that often have to rebuild after a war, are countries that may need help because, again, they have been through tough times. So what makes the two groups different is that the characteristics of the countries of origin are very different. So they may be in different parts of their growth trajectory. But we haven't looked at this heterogeneity. It would be nice to do that.
Inma, Tia from Göttingen. Hello, Anna.
Hi.
So very nice presentation.
Thank you.
Actually, my question was in the same direction as Michele's question. I was going to ask why refugees should be different than migrants in this concern with respect to FDI, and you have answered already. And my second question is related to the identification strategy and to the use of instrumental variables. If you see, when instrumenting your coefficient, the magnitude practically is the same as without instrumenting. And my question is, do you have any reason why maybe in reality you don't have this endogeneity problem, and using the refugees in an OLS, of course, with the corresponding fixed effects, you are fine? And why do you think it's so that the coefficient is practically the same? It's as if the OLS coefficient is indeed unbiased in this regard.
Well, you know, it depends on which coefficient you look at. Thank you, by the way, because so this is a very important point. But look, for example, at this table. In the first three columns, we look at different groups of refugees. The first column, all. Second column, refugees without ties. Third column, refugees with ties. So the refugees with ties have ways to place themselves in locations which are ideal for them. Or at least would think that where family and friends have located are places that would be good also for the refugees from an economic point of view. So the refugees with ties are likely to be the most endogenous among all refugees. And then for them, you find the biggest positive impact. So if you compare this coefficient with this, you see that there is a difference. Now, this is a regression where we instrument total refugees, but in total refugees, there are also refugees without ties. So basically, what I'm saying is that the regression with refugees with ties shows a bigger, more positive impact of those refugees whose placement decisions are more likely to be endogenous. So exactly what we would expect. So I wouldn't feel fine not to instrument.
Okay, thank you.
Thank you.
Anna Maria, we are running out of time. I don't see anybody else, but I have a question for you on the FDI data. So you're looking at the total volume of FDI, but there are two ways the refugees might be conduits for FDI flows to their home countries. One is they work for Intel, and Intel is headquartered in San Jose, so they convince Intel to invest in Vietnam. Or they might be investing their own money. Is there a way to, I mean, this would be an extension, do the analysis by size, or do we know the company where it's like a conglomerate, large corporation versus individual small guy investing? Is there a way to look at that differentiation? So do we know which channel is stronger? Well,
I don't know if there is that information in the FDI markets data set. Maybe Pierre-Louis knows. I don't know, honestly. Probably there are additional variables that we could use, but I don't know if there is the size of the firm that carries out the foreign direct investment. So that is something that we need to check. But I see your point. Your point is whether basically the refugees work for firms that carry out the foreign direct investment, or whether the refugees themselves, which are two different, quite different.
Mm-hmm. Yeah, because the causality would work differently. If I'm Intel and trying to figure out where to invest, maybe I pick among the community, hire people who are going to help me invest in Vietnam. Do you see what I mean?
Yeah, but at the same time, we use this location of refugees when they were first placed. So you see, then it must be the case that the firm from which the FDI originates is in a location where refugees were more likely to be placed the first year. Yeah, so that's why it's very important to use this exogenous location. And what really is important to me is that graph that shows that where refugees without ties are located is not where economic migrants from the same country of origin.
I see. Okay.
Yeah.
All right. We are running out of time. I think there's one more question by Pham Dang.
Yeah, hi.
Hi.
Yeah, It's great with your presentation. Thank you very much. And I am very interested with the part of Vietnam. I wondering whether it would be interesting to know the motivation, the driver, the real driver for investment come back to the country of origin. Not only economic motivation, but also I think maybe social references. For that hypothesis, I would like to, it would be better if you have the information on specific provinces or districts of the country of origin before the refugee moved to the US. Maybe I think if you have sort of data, you can investigate the differences in the location of the hometown. Yeah, in the difference in the FDI projects, FDI flows in different hometown of the refugees within a country. For example, in Vietnam.
So for Vietnam, we don't know the district, but we know whether the refugee came. So we know the most refugees came from the south, and we know whether the FDI went to the north or went to the south.
Yeah, but I think the south and north is quite large.
Yeah.
For hometown favoritism hypothesis.
That, it's, I think it would be very hard data to find, because this data, for example, the data that we're using for refugees from 1990 on is all the data that is collected.
Yeah.
And no data on, I haven't seen it, on the district within the country from which refugees are from. Yeah, very demanding.
Yeah. Great, thanks.
You're welcome.
Okay, Çağlar, so should we?
Yes. Yeah, I think we're out of time. I don't know, Simone, do you have any announcements to make? We have Giovanni Perry.
Giovanni Perry next week. No specific announcement, no.
Yeah. All right. Well, thank you again, Anna Maria.
Thank
And bye to all participants.